when, when you want to buy gold, most of all, is when real interest rates are falling, confidence in the currency and confidence in the government's solvency is in question. It's exactly what's going to happen. So do we have a short-term, problem for gold here? Yes, it could last several months, several quarters even. I'm not sure, but I will pick up on it when things change. Right now, gold is not my favorite play, and silver is not either. But they will be mandatory investments down the road once again.
You're watching Capital Cause, and my name is Danny, and today's guest is a returning Michael Pento. Michael, thank you so much for coming on.
Thanks for having me, Danny. Looking forward to a great conversation with you, my friend.
Definitely. Well, let's just dive in, Michael. What is front and center for you right now? What is occupying your headspace?
Well, I mean, obviously the election is playing out in shockwaves across the portfolio here. There's going to be massive fiscal and maybe even some monetary stimuli down the road. And this is going to just, I think, delay and defray the recession for a little while longer. But as a caveat, it in no way eliminates the massive bubble that we have in stocks, bonds, and in real estate. So that hasn't gone away. It's getting worse and worse. But I do believe there's going to be enough, tax cuts and, you're giving people no taxes on Social Security, no taxes on tips. Corporate taxes are going to 15%. So I think there'll be more growth and a little more inflation, and perhaps a lot of inflation. And what I'm most myopically focused on is the long end of the bond market. The long end of the bond market is not going to be happy when these things get passed. And if rates rise slowly and nominally in the context of a growing economy, then we could kick the recession down the road for maybe another year or two. That's a possibility. If we get a little bit of growth and a lot more inflation and rates rise because there's problems in the credit markets, repo markets freeze up, and you can get a shock like we had over there in Britain. And that's a 1987 type of moment. So listen, I haven't been short the market since early 2023. I'm net long the market, enjoying a good part of this ride up. But I do have a cautionary tale to tell you. We are going to have a grand reconciliation of asset prices. Trump's election does nothing in the way of preventing that from happening. It's going to happen. And I believe the catalyst will be from the absolute skyrocketing of long duration bonds in our treasury complex.
What is causing the skyrocketing of these long-term bonds?
So you have several issues here. You have, first of all, illiquidity in the bond market now. You have illiquidity, inflation, and insolvency. And I just quickly go through all three if you allow me to. So illiquidity, the money that was in the repo the reverse repo facility, which represented all those excess reserves that was dumped in by a central bank post-COVID. Those reserves were once $2.5 trillion in reserves. Now it's just like $150 billion. That's it. So your liquidity is leaving. The easy money that was used to buy treasury bills,
right,
that was parked at the Fed earning interest, has gone out of that fallow construct there, which is just excess reserves parked at the Fed, outside of the economy, outside of the financial system, has already ex post left the Fed, has bought treasuries, has bought stocks, and it's already there. So that's illiquidity. And then you talk about insolvency. You're talking about a national debt that's going to be $60 trillion. $60 trillion in the next 10 years.
That seems kind of low, actually. I mean, we're already at mid 30s, right?
Well, I was gonna thank you. Yeah, I mean, that's if we have no recession and no inflation in the next decade. Now, I mean, the odds of that happening are zero. we are going to have an outbreak of inflation and or an outbreak of a recession, which is going to cause those, I would say $2 trillion deficits to go to 4 to 6 trillion per annum. Okay. So, and if I look at the interest payments that we're paying on our debt, we're paying just on interest payments 20%, 20 to 25% of all revenue in a healthy economy. Our debt is 720% of our revenue. I mean, you're insolvent. We have an insolvent treasury, and that's insolvency in supposedly good times, like as you intimated. 60 trillion is a great number. Now we'd be happy if we get that number. It could be a lot higher. So you're going to have the GDP ratio is going to go from 125% to 200%, and that's a disaster for the treasury market. So you have illiquidity, you have insolvency, and what was the third thing that I mentioned? Is
inflation.
Inflation. So those are that's like three deadly daggers in the heart of the treasury complex. And inflation was, as they officially recorded it, 9% at the high. Mm-hmm. Remember, for decades we said, woe is me. We just can't get to 2% inflation. If only we can get to 2%. Well, you didn't get to 2, you got to 9, but really didn't get to 9. You really got to like 17 to 20. That's the reality behind it. And the worst part of it is that inflation is there. So when people who will asininely say, well, inflation is way down, and what they're really saying to you is, well, prices are way down. No, prices are rising more slowly.
Yeah, it's decelerated.
Yeah, it's called in the second derivative disinflation. So prices are rising more slowly from a level that most of the middle class, most of the country, the bottom 4 quintiles could not afford. The fact that they're rising at all is salt on the wound to them. So the fact that they're not rising at 9 anymore, I guess it's better that they're rising at 2.5 to 3, but they're rising from an unaffordable level, and they're going to be going up even quicker, more quickly. Say from 2.5 to 3 to maybe 4 or 5% in the next few quarters. So a lot of these policies that Donald Trump, far better in my opinion than Kamala Harris, but they are inflationary. Tariffs are a one-time hit to the cost of money. So that's going to be, if you put 60% tariffs on everything that comes from China. Have you ever gone Christmas shopping and like flip the boxes over and see like where things are made?
Right.
Everything's made in China.
Mm-hmm.
Okay. So it'd be a one-time shock that comes on top of a massive COVID shock. And then you're going to have, the king of all debt and the king of a weak dollar. I don't know if that's really deflationary, right? So, Danny, inflation is a problem. It's going to get worse. And then you're going to get to a point where you have, I think maybe Powell's tenure ends in 2026. I believe I'm correct. And you're going to have an appointed guy in there whose job is going to be here's your job, print unlimited amounts of money to buy long-term debt so interest rates don't go through the roof. So create a lot of inflation to make sure interest rates don't go higher. That's a death spiral. That's an inflationary and interest rate death spiral. So if we want to become Zimbabwe, that's probably where we're headed. But for right now, the zeitgeist is we're going to have much lower taxes, much more growth, a little bit more inflation. You do not short a market that has more growth and higher inflation.
So it seems like the inflation comes from the money supply side post 2026, if what you're alluding to is true. What about until then? Where does the inflation come from? Does it come from the supply side or the demand side, or both?
It comes from mostly from the demand side, and a little bit from the supply side. So if you're putting tariffs on Chinese goods, and we have a delay in when was the last time you drove by a toy making factory in the United States? And we don't make it. So there'll be a supply shock, but the demand is going to be there. It's going to look a lot like COVID. Remember when they told us, don't go outside because you're going to die. So stay inside and fire up your computer and buy, like, every day was Christmas for UPS and Amazon. And oh, you're not going to work? Don't worry. The checks are coming in the mail. So you can spray your mail with some disinfectant and then you can cash your check. We've got thousands and thousands of dollars. Oh, by the way, you don't have to pay your auto loan and you don't have to pay your mortgage too. So there's your demand side and there's your supply side shock. That they figured it out, Danny. How do we get inflation? We just counterfeit trillions of dollars and hand it to people. Oh, it's called helicopter money. Oh, that's how we can breach 2% inflation, that impenetrable target. We did that, and the ghost, the genie's out of the lamp, as they say. I think they're going to try that again, especially with all the AI. The AI is supposed to be replacing all these menial jobs. So, people sit home and they're going to say, well, okay, I'm a voter. Where's my check? This once great country is definitely, I'm very happy for the Trump election. I don't think it's a panacea. I think it's a Band-Aid on a mortal wound. And no matter what he does, we haven't solved the triumvirate of bubbles that are out there. Credit bubble is immense. The real estate bubble is immense. The stock market bubble is, intractable. And I think it gets worse before it gets better.
Is there an order of operations as to when these bubbles burst, or do they all come crumbling out at the same time?
There's a triumvirate of bubbles that I think are inexorably linked. So I think the first thing is going to happen with my model is geared toward pickup is the bursting of the credit bubble. So you start seeing problems in the repo market and the money markets. That's where it all starts. And that filters into the stock market. And then you're going to see the housing market probably in a tertiary position. And then you have a problem because the top 20% of individuals in this country, the top quintile, they're responsible for all the consuming. I mean, the middle class, this is why Donald Trump won. People don't want to understand that Donald Trump won, and he won even with minorities who normally don't vote for Republicans. This is what they never got, the liberals. And I'm not really a political guy. I'm a libertarian, but you can't separate politics from money management. You just can't do it. I mean, some people want me to do it, but I can't do it.
Especially nowadays. I mean, these markets are all politicized.
Politics dictate fiscal and monetary policies, and that's what drives the economy. I mean, we don't have a free market economy here. We're not looking for, like, what's the supply of savings versus the demand for money. That's not the fact. That's not what we're looking at. We're looking at an artificial supply of money, and we're looking for how much demand comes from the largesse given by government. That's what we're doing.
And then we wait on one guy to make a decision as it relates to the interest rate for the entire country.
I'm sorry, you said one guy?
No, and then we wait for one guy, i.e. Powell, to make a decision as it relates to the interest rate for one country.
Well, you have 12 voting members of the FOMC who just I hate to dissent from this decision. Powell is cutting interest rates. He cut them by 75 basis points already, as you know, Danny. Mm-hmm. He cut interest rates, and he said he's going to cut them again because he can't predict what the Trump administration will do because nothing's been done yet. I mean, he can't say, oh, we're going to deport millions of illegal immigrants and that could drive up the cost of labor. Can't say that. He can't say that 60% tariffs on China, and I think it's 10% for everybody else, that might drive up prices on a one-time step-up basis. He can't say that cutting taxes across the board on corporations and individuals could drive up the deficit short-term. I mean, but reasonable people can assume. Now, I'm all for tax cuts, but I'm for spending cuts. Where's the talk about cutting? If you don't cut Social Security, you don't cut Medicare, Medicaid, and you don't cut interest on the debt, what have you done? Where everything else is just ancillary. It's marginalized. If you don't attack Social Security, Medicare, and Medicaid, interest on the debt, and defense, that's it. That's almost all of the budget. I mean,
do you think he will? Do you think he will, or no? Is it politically charged?
I'm very much convinced that he won't, because he's the king of debt. He said he's the king of debt, and he's going to say we're going to cut taxes, and we're going to find some waste to cut. Well, I have no doubt there's a lot of waste to cut, but there's not enough waste to compensate for the tax cuts he's proposing. I mean, no taxes on Social Security,
Yeah.
no taxes on tips, no taxes on overtime, and he has a majority. He doesn't have a super majority, but he has a majority in the House and the Senate, so he can get these things done. And I'm all for. I am for Danny. I am for shrinking the size of government. So if you cut taxes and you accompany that with spending cuts, that would be a panacea
Yeah.
for me. It would be wonderful news. But if you're going to, increase the debt and deficits at this juncture, the bond market is, I'm not God. Newsflash. I can't tell you the date and time things are going to happen. But we are set up for a massive revolt in the long end of the Treasury complex, which would directly affect home prices. It would directly affect the price of stocks.
You know what this reminds me of? When your phone's like gets full in terms of its memory, and then you go and scroll and you see what you want to delete, and your phone has like all of this, it breaks down like the pictures, the videos, the apps, etc. And you're like at 99%. And then you just go delete a bunch of pictures that aren't even worth a few megabytes. And it's like, okay, I've I've done what I can, but like the big things are like your videos, your apps, etc. Those are the things you need to clear out, not like these small fry pictures.
Well, Danny, I mean, you tell me. Maybe I was asleep. What part of Donald J. Trump's campaign promises and President-elect Trump's plan says we're going to do something to reduce Social Security? All I'm hearing is going to cut taxes on Social Security. That's less revenue, right? Right? That's less revenue, right? I think my mathematically correct on that. So instead of saying, well, we're gonna tax Social Security for those making over, what's the limit, whatever it is, or we're gonna put a limit on what you can collect, something that would actually make the program solvent. And you have Medicare and Medicaid, which is even a bigger problem. And I think the interest on the debt is only going to get much worse too.
Yeah, and that, I mean, and you kind of alluded to this at the beginning of the interview, and that could take us to a debt to GDP ratio as high as 200%. Is something like that ever precedented in history? Has there ever been a country that's gone up to 200% debt to GDP?
Oh yeah, well Japan, Japan has done that. People say, well, we could be Japan, or we can be the Weimar Germany or Zimbabwe. We'll be lucky if we're Japan, but let's just how lucky is Japan? Japan's GDP on a dollar adjusted basis is the same today as it was in 1989. So if you want to, in real terms, so I'm not talking about nominal terms, in real terms, Japan hasn't grown for 35 years. And their stock market hasn't gone anywhere in 35 years. So if that's the best case scenario, I mean, we could be Zimbabwe. We could be, we can go the way of Hungary post World War II. The dollar could be the Hungarian pengo. I don't know. That's a possibility too. But if we turn out to be Japan and it just turns into a country where there is no bond market, the only bond trading there that's done is done through the Bank of Japan. They buy like all initial. Oh, you're gonna go. Oh, they're gonna float some new bonds, JGBs. We'll buy them all because no one wants to buy long-term bonds in Japan, but the Bank of Japan. So I mean, we have like a zombie nation with zombie-like stock returns and zombie GDP. I can guarantee you this: if that's the case, we're going to have a 1989 collapse. That would be the the ex ante factor that would occur. We'd have a 1989 collapse in prices because you'd have no GDP growth for 35 years. I mean, we're trading next year, 2025. Earnings are supposed to grow 15%. Can you grow earnings by 15% in a country that supposedly has no inflation and no GDP growth? That would be pretty good trick, right?
Yeah. Well, Michael, I want you to talk to me about gold for a second. Why hasn't gold kind of sniffed out all these things? It's actually gone down since the election.
Well, let me give you my thoughts on gold and a complete disclosure. I sold half of my gold position and all of my silver position, which were very profitable positions for us. Um,
When
so
did you sell, if you don't mind me asking?
right after the day after the election, the day of the election.
Gotcha.
Okay. So gold likes it when nominal and real interest rates are falling and there's less competition for stocks. So think about a recession. Gold, the best sector, I have a 5 sector portfolio. The best sectors are sectors 1 and 2. So that's disinflation and deflation. So if you think about fears of recession, fears of chaos in DC, gold was thriving up until the election. And think about it. Well, if I think a recession is coming, and I think chaos is going to occur in our political environment, then earnings would be going down. So stocks would not be a good alternative. And nominal rates are falling. And that's less competition for gold, which is money, which competes with money markets. And I'd rather own gold than lose money in stocks. That was the calculation heading into the election. Now with the election of Donald Trump, what's happened to interest rates? Actually, not only since Trump has been elected, but what happened to interest rates since Powell cut interest rates in September?
Mm-hmm.
You know, interest rates on the long end of the yield curve are flying higher. They're flying higher. So that's more competition. Even short-term rate. If you even look at a 2-year note, the rates are rising across the yield curve. Now I know the Fed funds rate is going down slowly now, very slowly now. I don't think Powell's going to be able to cut this rate to 2.5%-3% very quickly, like what I thought was going to happen if Kamala Harris was elected. She wasn't. So you have to react to these changes. So gold is now the calculation for gold is I've elected a president who's more pro-growth, more pro-inflation. Interest rates are rising. There's more competition for gold, which is an asset that doesn't bear any interest. And by the way, earnings could be better too. So let's buy some stocks. And you throw onto that poop pile the fact that the president, for some strange reason, loves shitcoin. He loves cryptocurrencies. Instead of tying the nation's currency to gold, as Article 1, Section 10 of the Constitution says, he loves Bitcoin. Okay, so he loves Bitcoin. Bitcoin is flying, which is, some people think it's competition for gold. So people are going to Bitcoin. And what has the dollar done since the election? Because we have more growth supposedly in the pipeline. The dollar has risen. So you have a higher dollar, higher interest rates, more competition for Bitcoin, higher growth, higher inflation. All those things are deadly for gold. And that is why I sold my position down to, about 4 or 5% in the portfolio, and it could go down even lower. However, Danny, here's some good news. Longer term, like we talked about on this program, longer term, what's going to happen is the dollar is going to crash, and we're going to have a central bank that's forced to monetize trillions of dollars in treasury debt, like they've done before. They did it before, they'll do it again. And that means nominal rates will be lower than normally would be, and real interest rates will be falling. And that is when you want to buy gold, most of all, is when real interest rates are falling, confidence in the currency and confidence in the government's solvency is in question. It's exactly what's going to happen. So do we have a short-term problem for gold here? Yes, it could last several months, several quarters even. I'm not sure, but I will pick up on it when things change. Right now, gold is not my favorite play, and silver is not either. But they will be mandatory investments down the road once again.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. I see. What about commodities? You do spell out this inflationary trend that we're heading towards. Will commodities see any tailwind because of that?
I believe so. Yes, uranium. Um, not so much oil because we're going to be producing. We're already producing a lot, record
Yeah.
of supply of energy in this country. But Trump has a way of getting foreign producers on board too. So you could see the supply of oil go up. So that's not my favorite play, but base metals and energy have a more prominent role. They had a zero role to play before, but now they will have a role in the portfolio.
Interesting. You mentioned uranium, base metal. I'm assuming nickel, copper, things of that nature, battery metals, lithium,
Mostly uranium is what
mostly
you have
uranium.
to own you don't have to own sugar and wheat. You don't have to go crazy, but um, uranium is probably one of my favorite plays right now.
I see.
Which I
Well,
will be taking, in full disclosure, I haven't taken a position yet, but I will be taking a position in that shortly.
gotcha. Uh,
Maybe even when I get off this program.
oh, interesting.
I don't know if you can say that. I mean, I don't own it yet. I want to be full disclosure.
Yeah.
I don't own it yet. I'm not
No, it's
purchasing
you're
anything.
thinking about it.
Yes, I'm thinking about it. Am I allowed the freedom to think about it? Yes, I
Yeah.
guess I.
Yeah. Let me get your thoughts really quick on crypto. Bitcoin, as we've alluded to, has gone through the roof. It's currently at 88, a little under 88,000. What do you make of Bitcoin and crypto in general?
Well, I mentioned to you. I mean, Donald Trump wants to make America like the king of crypto. Here's the thought I want. I mean, and listen, if you love crypto, I'm an asshole. And if you hate crypto, you might like what I have to say. But listen, I don't understand. Explain this to me, Danny. And I don't even know how you feel about cryptocurrencies. I really don't. I honestly don't. You could tell me after I make the statement. But one of the things I think the most impressive thing about a cryptocurrency is it's supposed to be decentralized, right? It's supposed to be
Mm.
anonymous, immutable, and what was that? Decentralized. In other words, not in the purview of any government. I think I'm correct in that. Now, how is it that a currency that gains its value by being decentralized and immutable and an anonymous transaction gains so much value from being loved by the government? Doesn't
Interesting.
that should scare the crap out of anybody? Because I mean, Wall Street's embraced it because yeah. I mean, if Wall Street embraces it, then they have. If I buy an ETF that invests in cryptocurrencies, then Wall Street knows who I am. That demand that's coming for these cryptocurrencies, it's KYC laws and AML laws. They know who I am. So what I'm trying to say is this is an ephemeral demand. It can be taken away like that
Yeah.
by the very same government that gave you that demand.
And very conveniently, it siphons demand off of gold and silver.
Because of this, I think a straw man, this spurious idea that cryptocurrencies are, gold 2.0. Listen, gold is a precious metal, as you know. It's extremely rare. It's virtually indestructible and it's very beautiful. I've never seen a beautiful Bitcoin. I've never seen a Bitcoin, and neither of you. It's an electrons that spin around on a hard drive, I guess. There's a private key. I guess you could look at your private key and say, "Ooh, wow, look at that! Look at that private key. How beautiful it is." Here's the thing. How many? I want to ask you this: how many Bitcoins are there out there? 21 million? Is that it?
21 million. That's what they're
20,
tending towards.
20, what? Say again. Sorry.
No, it's the supply tends towards 21 million. It's a
21.
little under that now currently.
Okay. But so it's limited in supply, right?
Yeah.
How many blockchains can there be created in which I can have a coin, because it's not really a coin? How many blockchains can be created that serve virtually the same purpose and function as Bitcoin or Ethereum or Litecoin or Dogecoin or
Infinite, right?
infinite? There's an infinite number of blockchains that can be created, both public and private blockchains. So, and that's the case. Then how rare, how much does it really mean to me that I have 64 numbers and letters in my private key? How rare are those numbers and letters? And I mean, there's an unlimited supply of blockchains and unlimited and that means there's an unlimited number of cryptocurrencies that can be created. So how rare are if I told you there's an unlimited number of elements that are virtually indestructible that are being created in the Earth's crust? They're not gold, but they act like gold. They're beautiful and they're rare and they're virtually indestructible. That would attenuate or dilute the value of gold, even though the elements that are being created aren't gold. They
Right.
share the same properties and functionality as gold. Well, that's how I feel about blockchains and cryptocurrencies. And I haven't heard anybody, I've debated a million people about this. Tell me, they'll say, well, Bitcoin is different because. No, I mean, it's a cryptocurrency. It's supposed to be immutable, decentralized, and anonymous. And so are all of these public blockchains are supposed to be the same thing. I see all the transactions, and I kind of think, with these supercomputers out there, they could even, they understand who that blockchain. Maybe that's where this is headed. I'm overstepping my bounds here because I'm not a computer expert, but I am a marketing expert, a market expert. And I can tell you what I just said is the fact. So that's why I'm not a big fan of cryptocurrencies.
Well, let me know in the comments down below, guys, what you think the answer is to Michael's question. Is it does it dilute down the value of Bitcoin down to essentially nothing? Let me know in the comments down below what you think. Michael, it's been a pleasure having you on, sir. Anything else you want to talk about that we didn't get to?
Geez, well, we could talk about we talked about the asinine move of Powell cutting interest rates in a growth and inflation
Yeah, go for it.
environment. I mean, that to me is completely ridiculous. But if you want to make money in this environment, I would myopically focus on the functionality of the credit markets. Until then, unless and until you see some disruption there, and as of right now, the answer is no. Financial conditions are easy, and credit spreads are as tight as they've ever been. And maybe that's your maybe that's your danger sign. But until that changes, until those spreads blow out and conditions tighten, I would say just stay long the stock market. But I will tell you, can I leave you with this one thing?
Sure.
The proliferation of target date funds, which just say, oh, how old are you? Okay, we're going to 60/40 your portfolio, and passive closet indexed fund investing has exploded in the last few decades. The ownership of stocks for Americans has never been higher. And everybody is concentrated in the same thing, the same index, which is dominated by 7 stocks.
Right.
When, not if, Danny, when that changes, and I've been doing this 34 years, so I can tell you, I can guarantee you it will change. There's going to be an implosion in asset prices like we've never seen before. And the ramifications of that are, there's going to be helicopter money and QE infinity, and the balance sheet of the Fed's going to go to $20 trillion. It's going to be a disaster for the stagflationary outcome of this country. But as I alleviate this, the Trump's election does delay that process. It doesn't cancel it.
I see. You mentioned Powell in passing. Really quick, what's the rationale behind Powell cutting in a inflationary environment right now?
Because he's data dependent. He's looking at faulty data that's reported in arrears. He told you he can't have, Powell is driving with the dashboard and the front windshield has been blackened out, and he's looking behind and he's doing that. That's how he's. He told you that. He said, we are data dependent. And the data he's most dependent on is what? Labor data, which is the most lagging of all data.
Yeah.
So he's gonna keep cutting rates, maybe more slowly, hopefully, albeit more slowly. But the direction of the Fed funds rate is going to be lower into an inflationary spike in inflation. And then when he gets that inflation news, he'll say, "Oh, maybe I was wrong." Maybe inflation wasn't transitory.
Yeah, here's an experiment anyone can do. Just go to ChatGPT, ask it to give you the actual and the announced start and end dates of of each recession throughout history, or at least like the last 50 years or so. What you'll notice is for a majority of these recessions, by the time the government announces that they've started, they've already ended.
Right. You're right.
Yeah.
Yeah. So what the global financial crisis recession started in December of 2007, right? And I
Mm-hmm.
don't think they called that one until late late '08 or early '09, right? I don't remember the exact date, but if you
Sounds
if
about
you
right.
were if you were if you were investing based on what the Federal Reserve thought the markets and economic conditions were, well, you would do exactly the opposite of what you should be doing. Not close to the right, exactly the opposite of what you should be doing.
Yeah. Yeah. Well, it's been a pleasure having you on, Michael. Where can people find you? Tell us where you can learn more.
So the website is pentoport.com. I have a midweek reality check. It's $50 a year, a 5-week free trial. You get a lot of my thoughts about what's going on from a 36,000 foot level on there. And if you have $100,000 to invest and you're a US citizen, if you qualify for the portfolio, I will invest you directly in the inflation, deflation, and economic cycle model, which tries to make money in all environments, even in the upcoming grand reconciliation of asset prices, which is still ahead of us.
Awesome. We'll have the links to all that down below. Be sure to check it out, guys, if you're interested. Also, if you got value out of this video, don't forget to give us a like and subscribe to the channel so we keep getting more guests like Michael on the show. If you agreed with pretty much everything Michael had to say here, type in "Go Michael Go." If you disagreed with anything, however, let me know what it is. I do read the comments, so I'm really interested to see what you guys thought. And finally, check out our Substack, capitalcosm.substack.com, to support us even further. With all that said, Michael, thank you so much for coming on. Guys, thank you guys for watching, and I'll catch you in the next episode. Bye, y'all.
Take care, Danny.